They printed the number 91 on the screen. Then they pulled the plug. They changed the margin rules. They flooded the market with paper contracts. And they successfully pushed the price back down. But I have a question for you. Did they print any more silver? Did they discover a massive new mine overnight? Did the solar panel factories stop running? No, nothing changed in the real world. The only thing that changed was the illusion. You are watching a movie. On the screen, the price of silver is crashing. But in the theater, the building is on fire. The exits are blocked, and the people running the projector are trying to keep you in your seats. This video is not about trading. This video is about survival. We are approaching a moment in history where the paper price and the physical reality are going to divorce. They are going to snap apart. And when that happens, the price you see on your screen will be irrelevant. Because you won't be able to buy metal at that price. We are seeing the early signs of a total failure in the futures market. The CME rule change wasn't a sign of strength. It was a sign of panic. It was a sign that the physical inventory is so low they had to break the thermometer to hide the fever. If you are holding paper silver, you are in danger. If you are holding mining stocks, you are playing a leverage game. But if you are holding physical metal, you are the enemy of the system. And today, I am going to show you why you are going to win. I am going to show you the data that proves the vaults are empty. I am going to explain the concept of backwardation and why it is the death knell for the paper shorts. And I'm going to tell you why $91 will look cheap when the industrial panic begins. The infinite paper press. Let's start with the mechanism of the fraud. And I don't use that word lightly. The silver market is the only market on Earth where the supply is unlimited. How is that possible? It's because on the Comex, they don't trade silver. They trade promises. They trade a contract that claims to represent 5,000 ounces of silver. But here is the catch. For every ounce of real silver sitting in the vault, there are hundreds of paper ounces traded. Some experts say the ratio is 200 to 1. Some say it is higher. Think about what that means. It means that if just 2 people out of those 200 stand for delivery, the vault is empty. The other 198 people get nothing. Or rather, they get settled in cash. They get paid out in fiat currency that is losing value every day. This is the game. When the price hits $91, the banks don't sell real silver to drive the price down. They don't have it. They sell paper. They open massive short positions using margin. They create supply out of thin air. Imagine you are trying to sell your house. But your neighbor can print infinite photocopies of your house and sell them for $10. Who is going to buy your real house for $1 million? Nobody. The price of your house crashes because the market is flooded with photocopies. That is what happened last week. The CME raised margins to make it expensive for you to buy. And the banks flooded the market with paper to make the price fall. It is a perfect trap. But there is a flaw in their plan. A fatal flaw. You can print a paper contract, but you cannot print a solar panel. You cannot print an electric vehicle battery. You cannot print a Tomahawk missile. Industry does not consume paper. Industry consumes metal. And this is where the paper game runs into a brick wall. For 40 years, the silver market was dominated by investors. Investors are easy to manipulate. You scare them, they sell. But today, the silver market is dominated by industry. Apple does not care about the chart. Tesla does not care about the moving average. They need the metal to manufacture their products. If they don't have silver, they don't have a business. And that changes everything. The industrial drain. Let's look at the physical reality. The Silver Institute released their numbers, and even with their conservative estimates, the picture is terrifying. We have been in a supply deficit for 5 years straight. That means every single year, the world uses more silver than the miners dig up. Where does the extra silver come from? It comes from the above-ground stockpiles. It comes from the vaults in London and New York. We are eating into our savings, but those savings are running out. Look at the registered inventory on the Comex. It has plummeted. Look at the vaults of the LBMA in London. They are bleeding ounces. And while supply is shrinking, demand is exploding. Let's talk about solar. Photovoltaic technology is changing. They are moving to new types of cells like POPCon and HJT. These new cells use much more silver than the old ones. Some estimates say the solar industry alone will consume 20% of the entire annual mine supply this year. 20%, just for one industry. Now add in the electric vehicles. An EV uses almost twice as much silver as a gas car. Now add in the AI revolution. Every data center, every server, every high-speed connector needs silver. Silver is the most conductive metal on the periodic table. There is no substitute. You cannot use copper. It is too slow. You cannot use gold. It is too expensive. It has to be silver. So, we have a situation where demand is vertical and supply is flat. Mine production has been stagnant for a decade. It takes 10 years to open a new mine. Even if silver goes to $200 tomorrow, we won't see new supply for years. So, what happens when Apple calls the refinery and says, "I need 10 tons of silver," and the refinery says, "I don't have it"? That is the moment the paper market dies. That is the moment the price disconnects, because Apple will pay whatever it takes. They will pay $10 over spot, $20 over spot, $50 over spot. And suddenly, the spot price on the CME screen becomes a joke. It becomes a museum exhibit. Look, this is what they say silver is worth, but try buying it. This happened in the nickel market. It happened in the palladium market. And it is going to happen in the silver market. The signs of stress. How do we know this is happening right now? We look for the cracks in the dam. The first crack is backwardation. This is a technical term, but it is very simple. Normally, the future price of a commodity is higher than the spot price. Why? Because you have to pay for storage and insurance. So, silver for delivery next year should cost more than silver for delivery today. That is called contango. But right now, we are seeing signs of backwardation. The price for immediate delivery is bidding higher than the future price. Why would someone pay more to get the metal right now? Because they are terrified they won't get it later. Backwardation is the market screaming that there is a shortage. It is the market screaming, "Give me the metal now." The second crack is the premium. Go to your local coin shop. Go to the online dealers. Look at the price of a silver eagle. Look at the price of a generic round. Are they selling it at the spot price? No. They are charging a massive premium. Why? Because the spot price is fake. The real price is the spot price plus the premium. That premium is the free market telling you the real value of the metal. And as the shortage gets worse, that premium is going to expand. We could see a scenario where the spot price is $30, but you can't buy an ounce of physical silver for less than $60. At that point, the paper contract is worthless. It is just a betting slip on a rigged horse race. The third crack is the delay. We are hearing reports of refineries running at max capacity. We are hearing reports of delays in wholesale delivery. The mints are struggling to source blanks. These are the tremors before the earthquake. The system relies on velocity. It relies on the metal moving fast enough to cover the holes. But when the metal stops moving, the holes get exposed. The CME knows this. That is why they raise the margins. They are trying to force the speculators to sell their paper contracts so they do unask for delivery. They are terrified of the delivery request, because if too many people ask for the metal, the game is over. They have to declare force majeure. They have to settle in cash. And that is the default event we have been waiting for, the ultimate decoupling. So, what is the end game? The end game is the decoupling. we will see a bifurcation of the price. There will be a paper price, which they will manage and suppress. And there will be a physical price, which will be discovered in the streets. It will be discovered between real buyers and real sellers. If you are holding paper silver in an ETF that is not fully allocated, you are on the wrong side of the wall. When the crisis hits, that ETF might track the paper price, or worse, it might freeze. If you are holding mining stocks, you are better off, but you still have risks. Governments can tax windfalls. They can nationalize mines. Stock markets can close. But if you hold physical silver in your own possession, you have no counterparty risk. It is the only asset that is not someone else's liability. It is just metal. It has been money for 5,000 years, and it will be money long after the Federal Reserve note is dust. People ask me, how high can it go? That is the wrong question. The question is, what will you be able to trade it for? In Venezuela, an ounce of silver feeds a family for weeks. In Weimar, Germany, an ounce of silver bought a city block of real estate. When the currency fails, silver doesn't just go up in price, it goes up in purchasing power. It becomes the only liquidity left. The CME can change the rules on leverage, but they cannot change the rules of physics. They cannot change the rules of chemistry. We need silver to build the future. We need silver for the green energy transition. We need silver for the digital age. And we don't have enough of it. That is the fundamental truth that no margin hike can erase. So, when you see the price drop on the screen, don't despair. Laugh at their desperation. They are trying to hold a beach ball underwater. The harder they push, the more energy is stored. And when they finally lose their grip, that ball is going to shoot to the moon. Let's bring this home. You have a choice to make. You can continue to play their game, can trade their paper contracts. You can stress over their daily price fixes, or you can exit the matrix. You can become your own central bank. Every ounce you stack is a vote against their system. Every ounce you take off the market makes their scam harder to maintain. You are not just an investor. You are a soldier in a financial war. They have the printing press, but we have the physical truth. And in the end, truth always wins. The illusion can last longer than you think, but it cannot last forever. And based on the industrial data, based on the vault drain, based on the desperation of the CME, I believe the end of the illusion is close. Don't get shaken out. Don't let them steal your position. If they smash the price to $20, thank them. Back up the truck, clear out the inventory. Because one day soon, you will walk into the coin shop, and there will be nothing left to buy. Not at any price. And on that day, you will be glad you didn't listen to the paper price. You will be glad you listened to the physical reality. Now, I want to hear from the real stackers. I want to know who is holding the line. If you are stacking physical, if you are ignoring the noise, drop a comment below. Tell me, I am the whale. Because collectively, we are the whale. The retail stackers hold more silver than the ETFs. We have the power. We just have to hold. Join the community in the description. We share the best dealer prices. We track the vault numbers daily. We help each other stay strong when the manipulation gets heavy. This is not a sprint. It is a siege, and we are winning. Stay safe. Keep stacking. And I will see you on the other side of the reset.